All right, hey, what's up, guys? It's Jamie. I am just going to show you a quick video. I did it like a couple of times, but I was having some audio issues. But it's a video about RXDX. It's a play I made from FinViz, where I saw this company oversold. You know, I looked on the screeners, which I'm going to talk about. So this is just an example of a play. This one hurt a little bit because I could have made a good little profit, you know, more so than I was making. But my strategy in this case locked me in where I wasn't able to do anything, because I bought the shares and then I sold the covered call. So when it went crazy, which it did, I couldn't really sell them without. It's like a balance, like, so where you made a bunch of money on the stock to buy back the contract, the premium went so high, so it's basically I'm going to have to spend as much as I made to release those shares. So the only way that would have been worth it is if the share price continued to go up. So like if in this case I spent over $6,000 to buy it back. So if the share price went from, say, $100 to $200 or $150 or whatever, then it would have been worth it at that moment. If it was like, oh, let me do this really quick, and then it just keeps running, but I didn't think it would do that. It still might, but I don't think so. So I'm gonna show you right here. I will throw that in on how this played out. All right, hey, what's up, guys? It's Jamie. I'm gonna show you really quick my play with RXDX and where I went wrong, and you know, where I went right. So I left a lot of money on the table. But I want to show you how I kind of arrived at this. So I don't know much about RXDX, but the company itself is called Prometheus Biosciences, Inc. So you can see here, pre-market, it went up to $133, right? On a 30-minute, let's see how, let me go to a 10-minute. So that all happened pretty quick, right? So within 30 minutes, all this price action happened. From basically this level up to this level, right? So in this area here. So I'm not an insider. I have no crystal ball. I have no idea that it was going to do this. And I go to FinViz. I look at screeners. I look for oversold U.S. companies and stocks, and I buy, you know, shares. I buy some shares. I don't buy, you know, a massive amount of shares. But this one, I saw it had a $4 billion market cap. And I saw it was, I don't remember at the time, you know, where it had gone down to. But if you look on this daily chart, right, so I'm going to get before this big pump, you can see there on the RSI, it was way down, right, like way down over here. And I moved this thing on the way. So I was like, oh, you know what? It was trading all-time high at 63, somewhere in the 40s, 40, 45. I didn't get the bottom, you know, the $30, but I got around 37. So I thought, hey, if you know, if it goes up a couple bucks, I make $200-300, and I'd be happy with that. Okay, so this right here shows that my value is basically just under 10 grand, and it says that I'm up a little over 6,000. It was even much more than that, but it doesn't matter because I couldn't sell the shares. So if I go to the history, I'm going to, because there's a lot of history, because I don't know much about the company, I'm just going to show you how it worked out. So I found RDX on FinViz. I'm not promoting FinViz. It's just something that I saw. Now, whatever you define as due diligence for you, like, I'm not a massive researcher. I look at price actions and trends and just some opportunities, and then I look at my risk tolerance. If you were to jump in an airplane from Boston to Miami or Miami to Boston, you know, you're going to be up in the air 10,000 feet, whatever it is, you know, a mile above the ground, and a giant iron bird, right, steel bird or whatever, with you know, electronics and engines and pilots that are controlling your fate. But you have the confidence, even though you can't fly the plane, most of you anyway, I can't, but you have faith, conviction that plane will get you to the destination. So that's, when I got in this play, I didn't have to understand all the mathematics of how the plane works. I just said, oh, you know, I see a small opportunity. I'll buy 100 shares, risk $3,700. It could go to zero. And but I think it's going to go up a couple bucks. And in the meantime, when I saw that, as I sell a lot of covered calls, The next step was I saw that 2 weeks out, the premium paid $1,080 at $3 higher than my share price. So I make $300, that's 3 points, plus the premium of $1,080. So that's, $1,400 in 2 weeks. That's not bad. Who wouldn't do that? So I thought, wow, that's a pretty good return. So if I go to the calculator, and I want you to see my math, how I looked at things. So I was at like $1,400 divided by $3,700. It's a 37% return in 2 weeks, right? 36, 38, whatever it is. That's pretty good, right? The probabilities if that worked out. So that's why I took that position of buying the shares, meaning like I think it's oversold, it's undervalued, it's a $4 billion market cap, which you can look at yourself. You can research the company. If you landed here, either you're one of my friends or family members, or you just were checking out RXDX and what was going on with it today. So when I looked this morning and I saw that this had pumped or jumped, actually pumped, it just went parabolic up to $133, right? I was like, wow, what happened? And I said one of their drugs got approved, right, to go to the next stage. So, I don't know. It's probably going to fall back down. The analyst rating at a low was at 55. The mid-range is 64. Again, my average cost is 37. So I was like, hey, I'm in pretty good shape. It's currently rated as a strong buy. And but when I look over here, it was up 180% when I looked at it. So I was like, what's going on? And then I had to figure out how do I lock in some of those profits. Now, I've been up and down. I mean, if I go back right now, like the Tesla shares I have, I think I'm down 3,000. I've been down 5,000, 10,000, right? And then I'm up, thousands or hundreds or thousands, whatever it is. I've never been up tens of thousands here, at least. But I just look at this as volatility. And now I am stuck. I'm back into a contract. So the other analogy I want to give you is, let's say you had an apartment that you rented out to me. And I said, hey, I want to rent this apartment from you for a year. And I will pay you in advance for the year. Let's say the apartment is for whatever reason, for a whole year. How about this? For a month, I will pay you $1,080 for this room I rent out for you. Okay. And for whatever reason, this contractor, this real estate investor comes in and says, I will buy the house from you today, right now, and I will pay you well above market value, like an obscene amount of money to get you out of this house. But it's got to be empty. You got to get this tenant out immediately. Well, the tenant doesn't want to leave. There's like, I'm here for the week. I'm not going anywhere. So the only way for me to buy out this tenant is I have to bribe him, so to speak, and I got to buy back my contract, or in this case, buy back my lease from the tenant. Or in the world of options, I have to buy back my contract that ends next Friday, the 16th. So I had to pay $6,300 if I wanted to get out of that position, where I could free up my 100 shares that was showing a profit of basically 6,000, but I'm going to lose 6,000, right, just to get those shares freed up. The reason why I wanted to do that is if it goes back down, let me clear this out. If it goes back down to $40 a share, I'm going to lose the $6,000 anyway, right? Like if it goes below 40, I could be up 10,000, 50,000. It doesn't matter because I can't sell them for anything more than $40. So no matter how high it goes from 40, I can only ever get $40. So all I am ever going to make is $300, right? Plus my premium. That's it. That's all I can make. So it doesn't matter what this number is where it shows a profit, because unfortunately, the other things I could have done is I could have just bought this. I could have bought a call instead of sold the call. Like I bought the share. So if I would have just bought a call, then it would have cost me $1,100. And then when it spiked, I could have sold the call, and I wasn't obligated. I wasn't backed in any corner, and then I would have made $5,000 in this case because it cost me $1,000. If I sold it for $6,000, then I would have made $5,000. The other thing is if I would have just bought the shares without a contract, then I could have sold those shares at whatever price, whether it was $130 or $120 or $110 or 90, right? And whatever that is, I sold half or all of it, then I would have locked in the profit. But because I had this contract, I'm not allowed to do that. I have to figure out some options. Now, there may be other strategies I'm not aware of, and some of them are a little bit more complicated, but rolling the position is what I chose to do, essentially. So I mean, actually, what I chose to do is I bought the call back. I paid the 6,300, okay? And then I sold it at a higher strike price, which is basically $28 higher than I had before. Or not higher. It was $28 higher than my actual price, share price. So I collected the 3,900. So let me math this part out for you. So I had originally collected $1,080, and figuring, hey, if it sells for 40 or higher, I make that other $300. But I'm just going to show you real money. So $1,080 is what I collected. Now I just bought it back for $6,300. So now I'm down $5,200. Real money. I'm down $5,000. Like real money, hard money, not that is what it cost me to buy it back. So when I looked at that and I said, well, let me collect the $3,800. All right. Oops. So now I'm basically down $1,420. Okay. So at this $65 here, I am saying that if it's above 65 or higher, I'll lose the shares. But I'll make the spread between between 37 and 65, which is 28. So that's $2,800. So I make $2,800 if by next Friday, 12/16, if it never falls below 65, I will release my shares. I'll make my $2,800 in addition to the $3,800 I collected, and I'll add that back in. So plus 3,800. All right. So now I am, that's wrong, plus 2,800. So now I'm up $1,400. So I arrive at the same place. So you're like, why would you do all that, Jamie, just to arrive at the same place? Basically, you still make the same $1,400. Well, the reason why is, my thesis, I guess, or the way I look at it is it just jumped up. I don't know if this will hold up over the next 2 weeks. I think it's way over bought right now, according to the chart. But when I look back at the daily and I see, well, the all-time high, if I look at the weekly, the all-time high was only ever around $65, right? Not even that high, but just under that. So if it falls back to that previous level, which is possible, whoa, let me clear all that out. If it falls back below that, from this area now back below this area, great. I'm okay being in that area because I only own it for 37. So the chances of it going from 65 to 37 in this zone, I'm okay with holding those shares. So it positions myself to be at a better price than, basically 40. I just move myself up a little bit above the all-time high. And if that happens, and I go back to this chart here, and I said, okay, on the 16th, if it does close below 65 and I still retain those shares, I keep the 3,900 regardless. I already got it. And though I won't make the $2,800 spread from 37 to 65, maybe it's at 60, for example. Maybe it's at 50. I don't know. But whatever that difference is, if I was going out the same 2 weeks, and granted it would be for this next segment, but the premiums will probably be similar to what they are right now. So if I did that right now, the share price is $98, and if it was 65, right? Let's say this was 65 or 64, and this number here was, let's say, 60. Right? So same spread is what I'm trying to say. I'm just trying to give you the same comparison, if that makes sense. Whatever the number that I'm willing to take, strike price, below, if I'm in the money, there is no out of the money option here. But if I was willing to sell it, I only own it for 40 or under 40. I own it for 37. So whatever your share price is, I'm like, okay, so anything between that and this, I can go out another couple weeks, another month. In this case, that'd be almost about 3 weeks or a little bit longer than that. Then I would make another 1,300 or another 1,600 and plus the spread between this number, right, and whatever this number is here, 90, 80, or let's say it was, if it's 40, then the difference would be 50, 60, right? So it would be a $20 spread or a $25 spread. So it's going to be the same. It's going to be the same difference in what I'm willing to accept. But I would pick up another $1,000, $2,000 for holding it, or I could just hold the shares. The thing is the goal is however you decide. I mean, you can't be sure what's going to happen. I mean, if you work for a company like, say, Tesla, or if you even this company, if you work for this company, Prometheus Biosciences, and you knew you were coming out with the cure for diabetes, and you knew it. And now, if you have 10,000 shares, I mean, obviously you wouldn't sell them because you're like, oh, the product is going to be fantastic. Or if you worked at Tesla and you came up with airplanes that ran off of solar power, they were electric vehicles, right? They were electric airplanes, and you knew they worked, they were tested, they were going to work out fine, then you probably wouldn't sell those shares. I don't know if Prometheus Bioscience will go up to 130 again, or 150 or 200 a share. I don't think it will, unless they have some kind of major thing. I think this is a lot of just like, I don't want to say FOMO, but it's a lot of emotions, right here, where people are buying in, they heard the news, and people are getting in on that. So I don't know. That's the way I look at it. That's what I see over and over again. I saw this with Moderna and some other companies that it just seemed like that's what's going to happen. So I don't expect this to hold. I expect it to go back down closer to the 40. And in fact, that's what I'm hoping. And then be able to sell it again and make that $1,000 that I make up the ground between the $6,000 that I could have took today had I not had the contract, had I not sold the covered call, had I not if I would have just sold the covered call or just owned the shares outright, I could have made the $6,000. So I'm like, how can I make that money back that I lost out on today, besides just the $1,400? And that's through patience and probabilities and thinking that, okay, well maybe if I can do that for the next few months, if this stays up there, if it holds good, then I can do that a few more times. But that was a pretty good premium, for 2 weeks, $1,000 for that company at 30 something dollars a share. You can see that the Tesla, like right now, I have total return today. It shows that I'm down $3,000, but this is up, it's down. It says I'm up $5,000, I'm down $5,000. But I'm just trying to sell these premiums. I'm not going to get into this whole Tesla thing, but I did that today. Where is it? You can see where I I bought back my call, right here. I had sold a call for $200. Let's see if I can find it. For $6,075. Do you see that? $6,075. And then I bought it back for $5,520. Okay? $5,520 minus 6,075. I still have it up. 6,025 minus 5,575. It's $450. I got that right. 6,075. Oh. $6,075. Sold it for $5,520. I'm off my numbers here. Yep. So that's what I thought. It was over $500. So I made $550 for this play. That was from December 5th. December 5th. Right? Collected $6,075 to December 7th. So in 2 days, I made $555. on that transaction. So that's my goal, right? Regardless of what the stock is, RDX, sorry, RXDX or Tesla or Google or Bank of America. It doesn't matter to me. I'm just looking for the opportunities. And in this case, I was a little disappointed because I did not know it was going to pop so hard like that. I didn't know that was coming. But shame on me if I would have did a little more due diligence, if I was that interested. But I wasn't. I was just looking for a quick play and a quick come up, which I still win. It still comes out good for me, I think, overall. But I don't get overexcited when I see these things because I'm just like, depending where I'm at. Okay. All right. That's my share for RXDX. I'll see you guys next video.